Hello, everyone, and welcome back to the world's best investing podcast. Today, I have with me Satishan, who's a Substack author, an investor, and an alumni of my Tech Stock Goldmine course. Today, he's going to be pitching Coinbase. So, Satishan, thank you very much for coming on today. The stage is yours.
Antonio, thank you very much for having me on your podcast. It's a great privilege, mate. Having gone through your course, which I recommend to everybody who is going to listen to this podcast. If you have not yet signed up for this course, you're doing grave injustice to yourself and your financial health. Please go and subscribe for it. And thank you for having me on Coinbase. I started this investment thesis. One, because I was keen on Coinbase, but in terms of my event timeline, I did it after I've done your course. So there are a few nuggets from your course that have made their way into this. Okay. Without further ado, let's just deep dive into the presentation. I'm going to do a pitch on why I think Coinbase is an interesting thesis and an interesting investment for people who have been involved in the crypto space. And I can take questions after the presentation. Quick word on risk. As usual, I'm not a financial advisor. I'm a retail investor. I've done this for my own investment benefit, and these mental models and tactical strategies are my own way at how I interpret risk and how I react with them. Okay, let's deep dive. Let's get into it. So to just set the stage, right? I think I'm just viewing Coinbase as the Blackrock and the AWS of the crypto economy, right? That's my positioning statement. Two big infrastructure enterprise houses, one on asset management, one on the cloud infrastructure. And over the next few slides, it'll be clear why I am positioning them as these two, right? And I think this positioning is what allows it to become a multi-billion-dollar or hundreds of billion-dollar market cap company probably by 2030. So BlackRock's the world's largest asset manager, as everybody knows it, and AWS is the backbone of the internet economy. Basically, what Amazon did was take an operating expense line on their income statement, which was the technology infrastructure, and convert it into a revenue line. And that's exactly what Coinbase is trying to do, is building an infrastructure where developers can build the next on-chain, the decentralized apps that are required for the on-chain economy, while simultaneously also running an exchange where retail and institutional investors can buy, trade, and hold their crypto assets. So dual purpose. So virtually whatever Coinbase is doing eventually whatever Coinbase is spending on its exchange to run its exchange will be subsidized by the infrastructure layer that it is building. And that's why I think it's the BlackRock and AWS of the crypto world. And why are we talking about this now? I think I was not an early adopter of crypto. I did hear about Bitcoin way back when it started in early 2010, 2011. There was a lot of hype about it. At that time, even I thought it was a very speculative asset. But then over time, I've realized what use case it's trying to solve. And one of the big things that I think that fascinated me was how many people are kept away from our traditional finance, right? The percentage of people that are literally unbanked in the world is huge. So if you've got 8 billion people, I think traditional finance serves around 2 billion people. There are a lot more people who are banked. There's people who have a basic bank account, but there are a number of people who are not part of the debt market. There are a number of people who are not part of the equity market. And there are a number of people who are not even benefiting from all the various different financial instruments that are out there in the world. And that's a big infrastructure gap that is existing currently in the society, which Coinbase is trying to, and companies like Coinbase is trying to bridge. And in terms of this infrastructure gap, the other thing that is also driving, some of the adoption into crypto is, there are geopolitical risks. People are trying to de-dollarize. I'm not going to get that itself is topic for a whole new session, but I'm not going to talk about it in detail. US, the UK, Europe are expanding the regulatory frameworks to include crypto. The big institutions like BlackRock, VanEck, eToro are building ETFs on Bitcoin and Ethereum. So it's getting a great deal of institutional adoption. And the last but not the least is the fact that somebody in Africa or somebody in a remote part of Vietnam who does not have a bank before can easily open a Coinbase account or can easily open a crypto account either on Coinbase or Binance and start transacting with the rest of the world. So these converging forces are also driving crypto's mainstream adoption. The numbers kind of, these are compelling numbers that tell a story. If you think about equity investments, we all do company deep dives and we are all keen on investing on, in equity instruments. But if you look at the history of equity, we've got nearly a 500-year history in equity investments, right from the time when the Dutch East India Company traded on the Amsterdam Stock Exchange or the British East India Company traded on the London Stock Exchange way back in the 1500s and 1600s. That's 500 years of equity investments. And in the 21st century, after 500 years of maturity in the equity markets, we only got 300 million adults out of the total 8 billion population that actually are equity owners, right? But if you look at crypto in a short span of 15 years, 650 million people own crypto. So that's like staggering. And that baffled me how quickly crypto got adoption in the world. And that was really staggering. And that the fact that 1 in every 17 adults globally own Bitcoin is another number I think you need to keep in mind. And that's where I think all these forces are converging. Beyond crypto and beyond the speculative nature of crypto, there are a number of other use cases that are slowly gaining traction across crypto, right? So some of the companies like the currency exchange companies are now building their entire cross-border transaction backbone on blockchain. Now, those guardrails are sometimes traversing the Ethernet through Coinbase's infrastructure or through a Binance infrastructure, but that's another use case that's growing. There's banking without banks, where I said, an unbanked person from the emerging market is able to have a crypto account and bank with the rest of the world. NFTs went out of fashion a couple of years ago, but I think they're slowly getting back into fashion. Tokenization of assets is a big trend that's going to take place, and I'll tell you what's the market there. And then people are using blockchain as a mechanism of creating an immutable transaction record for digital communities. The other use case that probably not put in here, but which caught my eyes recently was soya beans that are transported or exported from Brazil to the rest of the world now are smart contracted on the Ethereum blockchain. That was fascinating for me. So a lot of the world, the transactions are moving slowly onto the blockchain world because it kind of eliminates a lot of the middle layer and makes the transaction cheaper as many people start taking on that. And add to all this, right, if you look at the entire asset class of the world, eventually everything is an asset. Even crypto is a digital asset. Your real estate is an asset. Debt instrument is an asset. Equity instrument is an asset. If you look at the entire world, and if you look at the World Inc., and if you took the balance sheet of the World Inc., there's close to $1,500 trillion of asset. Now, I'm not saying that all of them are going to go on the blockchain by 2030. That ain't going to happen. But there's a concerted move of moving a lot of the financial assets and some of the non-financial assets to be tokenized onto the blockchain. And if you look at the current value of digital assets in the world, it's around $10 trillion. That's not even 1% of the entire balance sheet of the world. So even if we went to an 5% tokenization of non-digital assets, that's not even the real assets. I'm not even talking of residential estate, etc. I'm talking of simple equities, loans, securities, all the things that can be tradable as a financial instrument. Even if 5% of them get tokenized, you're looking at a crypto market cap itself of the entire crypto market cap giving you an 8x increase, going to $80 trillion or to $100 trillion. And it is this opportunity that Coinbase is ideally positioned to capitalize on. And I like Coinbase because there are other companies too. There are Kraken, there's Binance, and there's other companies too. But why I like Kraken is because, or I like Coinbase, is that they approach this with a regulatory first approach in mind. They go with the philosophy of, let's understand what the policy framework is. Let's create the case laws around crypto. Let's educate our policymakers. Let's educate our people. And let's make sure that everybody understands what they're getting into in their mission to, what they call as increasing economic freedom in the world. And those 4 mission statements that are there in their on the website as part of their mission page is something that entire management lives and breathes every time. So basically translating that 4 mission statements by building the Blackrock parallel in the asset world, in the digital asset world. That is your ability to trade, hold your asset, finance or take loans against your asset, and doing reporting on your on your assets that you hold, to building the digital infrastructure that allows blockchain to proliferate and prosper. That's giving you all the cloud computing, storage, and developer tools to your engineering community to build, the on-chain version of the real world. And that dual positioning is what I think gives Coinbase a really unique advantage. So just think Amazon long back, right? Amazon started off as a retail bookstore. If you look at that retail bookstore, they just started selling. Then what they did is they expanded their retail, the merchandise that they were selling to many other products. Then they realized, you know what, to sell all these online, I'm building this huge data center and that's costing me a lot of money. Why don't I sell space? And I'm not using all the space in this data center. Why don't I sell the space in this data center? And why don't I sell data center as a service? That's when AWS was born. And they started selling a lot of space in the data center, and that money literally funded their retail business. Then they said, okay, if I can sell on my platform and I'm giving my data center as a service to other people to build their enterprises on, why don't I allow other sellers to come onto my platform and sell on my platform? And then I'll build the infrastructure in terms of delivery and payment processing, and I'll take a cut of everybody. So they became a seller, and they became a toll keeper, and they also became an infrastructure provider, all rolled into one. And they did that for the retail world. And I think Coinbase is positioned to do that in the crypto world. And that's why I personally, I'm quite bullish about this company's ability to kind of multiply exponential value for the for retail investors or for any investors alike. And how are they building this? They've just built they've brought together an exceptional team. They brought together an exceptional management team over time, started by Brian Armstrong, probably in his bedroom somewhere in America, ex-Airbnb guy. And he didn't just come to it as, oh, there's this new thing called crypto. Let me just start it off and let me see if I can make some money out of it. He really came with, started the company with a strong use case where he had experienced a huge problem in setting up a cross-border payment system across different countries. Particularly, I think it must be Argentina, where Argentina's currency was devaluing. And then he was finding it very difficult for people in Argentina to list their Airbnb properties and then get paid in US dollars, because there was a lot of issues with their currency and their economy. And that use case kind of gave him a light bulb moment, saying, hang on a minute, there must be an easier way of doing this. It can't be so difficult. And when he fell upon the paper that was written by Satoshi Nakamoto, I think that light bulb moment allowed him to form Coinbase along with another person called Fred Ehrsam, who was from Goldman Sachs. I think he had 35 rounds of dating with different founders before he zeroed in on Fred. And from there, the Coinbase journey started. And I think from day one, he's held on to the mission of, I want to bring economic freedom to the world. Crypto is the way to do it. I'm going to do it lawfully and legally. If people are not, if the government are not playing ball, I'm not going to go against them. I'm going to work with them. I'm going to work with the policymakers. I'm going to work with the legal team. I'll go to the courts. We'll create cases. I don't mind people actually filing cases against Coinbase. And that's amazing for a CEO to talk. People will balk at saying, we'll run away from court cases. But he said he welcomed, put the court case, let's create the case law, and let's make sure that we've got a legal framework in which Coinbase operates. And he's built a team of exceptional people from different, if you see their pedigree, they come from different places. Some of them have come as part of their acquisitions, and all of them live and breathe the same mission and the same philosophy. And I think they percolate that, they transcend that philosophy across to their 3,900 employees. I'm told, I read somewhere, it might be a myth, that both Brian Armstrong and Emily Choi have the final word in every single employee joining Coinbase. So that is, even you might be an administrator or a junior software engineer, you still have to pass the Brian Armstrong, Emily Choi interview before you get into Coinbase. Now, that's something I call dedication, and that's something I call, to culture. So this team has built a strong financial fortress. Simple, right? Crypto volatility aside, over the last 13 years, they have managed to build a great amount of cash. They're sitting on 9.3 billion to 10 billion of cash. Almost all of their debt can be covered by their cash in hand. Their equity has grown up to 10.2 billion. Their operating cash flow is around 3 billion and growing exponentially from the time they've listed, or from 2019. And they've spent around a billion and a half in cash on their acquisitions. And as their journey towards driving economic freedom improves, as they evolve into becoming the real Blackrock and AWS, that free cash flow number is just going to grow exponentially, and that's what's going to reward investors in the long term. Along with the financial fortress, they're also trying to make it more economical for people to transact on the blockchain. You know that Ethereum has got a huge significant gas fees, which is basically the transaction cost of transacting on Ethereum. But what Coinbase is doing is it's building a layer 2 on top of Ethereum, where the transactions speeds are much faster and they are much more cheaper. So, and they are seeing a 16% to 20% CAGR on their base platform, with more than 500 decentralized apps working on it. I think they've got around 2 million plus of daily active users, and there's over 5 billion of daily trading volume. So it's exceptional figures over time. And if you hit back to that slide which I showed earlier, which is the world's asset, as 5% of that assets gets tokenized, and you've got a close to an 80 trillion crypto market, that 5 billion trading volume will grow exponential to 30-40 billion. And the trading volume is a big indicator of the revenue, because they get a cut of the transaction that they get. Along with that, they are great advocates of policy making and regulation. They don't want to do anything that is in the gray area of regulation. So their policy is simple: engage, educate, and shape. Right? So engage all the policymakers, educate all the stakeholders, and shape the legislation. They've raised personally $206 million for this advocacy. Over 2 to 3 million people are already signed up to the Stand Up for Crypto platform, which is operational in United States, United Kingdom, Europe, as well as Canada. And they're regularly in touch with policymakers to make sure that the regulations are in place for crypto to operate successfully and become a mainstream asset class as well as a currency. The other big use case is basically USDC, right, which is the US dollar coin. Eventually, people are not seeing this coming, but I think it's going to come. Your currency will become a digital token, and that has grown exponentially. So now you don't have to have a bank account. You can just have a phone number, and you can start trading on a US dollar coin. That use case is powerful. And if you just take the last quarter, I think they grew their US dollar coin assets by nearly 50%. And then the big institutions are coming in. The big boys are coming to play. So you've got the likes of BlackRock, Grayscale, VanEck, WisdomTree, all building on the Coinbase platform, the Bitcoin and Ethereum ETFs. And Coinbase is the custodian of all the ETFs. So all the Bitcoin ETFs and the Ethereum ETFs that I and you are going to buy of BlackRock or any one of these big institutions, they are sitting on the Coinbase balance sheets as customer custodial funds, right? And the more they have it, the more they can then fractionalize it further to probably create more financial derivative products out of all of those. And their international expansion is also working well. Now 17% of the revenue is coming from international markets. Very recently, they managed to get Argentina and India onto I was very surprised that they got a license to operate in India, because India is pretty conservative when it comes to this. So let's see what happens in India. But kudos to Brian for managing to break into that country. So if they can break into India, in my view, they can break into any other country. All of this together is coming now. Like, what does all this help build, right? I can see we always talk about flywheels, right? A flywheel as a mechanism in which a company is able to do certain things at a certain speed always, so that they get that competitive mode and the competitive advantage. For me, it's I try to visualize this into one flywheel, but I thought there's not just one flywheel here, because there's a lot of things at play. There are secular trends, there's macro trends, there's also the internal ways of working of Coinbase, which are adding to this flywheel. So I think there's two flywheels that are operating in motion, which is being driven by Coinbase. And I'll just read out what's there because I think it's simple. It's just building the regulatory trust with the regulatory first approach. What it does is it allows them to open to new markets within the countries that are already operating, as well as within new geographies. That attracts more users to the platform. When more users come to the platform, they deposit more money, which means there'll be more transactions on the platform, and more transactions on the platform means they'll drive more revenue. When they drive more revenue, it strengthens Coinbase's capital base. And then what it helps them to do is it enables them to have sustained investment in top talent and top infrastructure. And this enables they execute consistently and with resilience. That also drives a strong innovation culture, which then delivers faster product cycles, better products, again, which attracts more users. And thus it reinforces both these cycles. So they need to keep doing this multiple times because it's an evolving space. They can't take their eyes off the regulatory environment. They need to keep engaging with the regulators. They need to keep exploring new markets. They need to be finding new use cases for crypto, and they need to be finding more users. So I think these two flywheels are now in motion. They're well oiled, and I think when they run in unison, it's going to be explosive for Coinbase. Very quickly, I've given both. I'm not the kind of guy who's going to give a prediction. These are just my estimates based on what might happen. It may reach that position or not, but I think if the super bull case of tokenization really happens, the share price can go 10x from where it is now. But in a more conservative scenario, it might be far less than that. But my guess and my bet right now, looking at how the economy is shaping and how the world is responding to crypto and the secular trends, I think it would be more than 5x at least over the next 5 years. But big word of caution, you have to expect extreme volatility. This is not where you watch your minute chart, watch your daily chart, watch your monthly chart and tell, Satishan, you told me it's going to go 16x. I invested in Coinbase yesterday. Today it's down. No, it's not going to happen. You got to understand the market. You need to understand the economy, and you need to understand that it's been a volatile asset over the last 15 years. But having been a volatile asset, it's the only asset that's given a consistent 150% CAGR over the last 15 years. So expect this to happen. I'm looking at it personally from a few indicators. I call them the ones that will help me sleep well, or the ones that help me that will make me grip my teeth. Basically, I'm going to look at how's the crypto adoption picking up in the world, how's Coinbase's subscription revenue going and growing, because how is it decoupling itself from the transactional revenue? Is institutional adoption going up? Are more countries getting onto the bandwagon by shaping regulation to allow people to transact crypto safely? And is Coinbase benefiting from network effects by having more users on the platform? Is it be able to sell more products, and are more users getting other users onto the platform to again generate more transactions and more revenue? Anything that goes up, that'll, as I said, it'll grit my teeth. But there are three things that I'll be looking at. If those red lines are crossed, my thesis falls apart. My financial warning signs is if FCF keep dropping. I know the crypto market and Coinbase's capitalization is very closely tied to the crypto market cap. So when the crypto market cap goes up, Coinbase's market cap goes up, basically because Coinbase's revenue goes up. And when Coinbase's revenue goes up, the free cash flow goes up, right? Now, Coinbase is trying to decouple from that cycle by first building that infrastructure like Blackrock and AWS, and then trying to pivot itself from transaction revenue to subscription revenue. So if that subscription revenue grows as a percentage, then it should not have negative free cash flows for 3 consecutive quarters. But if it does that, then for me, it's a big red flag. Then again, the assets on platform decreases when it's related to the overall crypto market, and that could be because it's losing out to competition. It loses any banking license, or it doesn't regulatory licenses are not forthcoming because they've got a superior competitor who's coming with more market share. And then finally, the management. If Armstrong leaves the company, or Emily Choi, or multiple team members from the management team leave the company, then I'll be seriously considering my investment and saying, okay, why have they left and what's the reason why they've left? So I'll just end with the statement: fortune favors the bold, but survival belongs to the disciplined. So whoever is investing in it, it's volatile. So appropriately size your position based on what your risk appetite is, how much you are able to lose, and for how long you can afford to wait with this investment. DCA, your strategy. I'm happy for people to connect with me in private. I can share how I have DCA, but I'm not going to recommend the same. You have to do it based on your personal circumstances. You have to be patient with this asset. You will find multiple drawdowns. You might have a 50% or a 200% drawdown, but at the same time, you might also see a 1,000% hike. So don't go overexcited when it hits a 1,000% hike appreciation, and don't lose heart when it falls down 200%. And keep against the metrics, make sure that the thesis is always being validated, and have a clear exit plan for your investment on both the price and the fundamentals. I think that's my pitch. That's my thesis. I have a big 180-page slide deck on Substack if you're interested in seeing the detail behind all of this. I hope you found this useful and it gave you an insight into Coinbase, and it tickled your brain to go and do more research. And thank you, Antonio, for having me here. I'll stop sharing and I'm open to taking any questions.
Satishan, well done. That's a wonderful presentation. I think everything is really quite clear, all the way from the macro to the micro aspects of the company. So that's a wonderful thesis. I just have a question for you, which I think might help shed some more light on the thesis, which is, what was the single data point, or perhaps the combination of data points, that took you from being interested in this company to having a conviction?
The single data point, that's a very, very good question, right? The single data point was I saw what its performance across different quarters were during the so-called crypto winter between 2022 to around the end of 2023. Although the revenues came down, right, they managed to trim their operating expenses in response to their reduced revenue, and they still had positive adjusted EBITDA for around 7 out of the 8 quarters they went through the crypto winter. And I think that said, right, the company is doing something fundamentally right. When the markets are good, it's just going to be amazing.
That's beautiful. That's a wonderful way to encapsulate it. Sort of like when I talk about Spotify defeating Apple, Amazon.
Correct.
Him's doing something that statistically was impossible, still is. So it's that little thing that just unlocks conviction. I think that's a wonderful.
Thank you.
Nugget. Yeah.
So and those kind of nuggets was possible because I went through your course, Antonio. Oh. And I read your Substacks. To be honest, right? I've got, I wouldn't say 30 years. I've got 30 years of experience in as a professional, and the last 15 years is what I've been doing I've been dabbling in investment. I've done deep dives in various different ways, but I think what really helped me nail down convictions was after I went through your course, and I should give due credit where it is due.
That's wonderful. Well, I thank you. Thank you for that. I think the credit is yours really for the work you do. I always say the course is good, but it works best when you're already quite smart, as is your case, very smart. So,
thank you.
I mean, you got to have the two things, But okay, so then the other thing that I think is interesting. I mean, I understand that what you inferred from the crypto winter thing is this is just an extraordinary organization. They are surviving during a winter, therefore, when good times come, they're going to do great. The question is, long term, this is directly pegged, so to speak, to the survival of the crypto ecosystem. So that would be sort of the inherent risk. So you're basically you're going long a company, and then you're going long a new phenomenon, which is uncertain in nature, although I would say quite promising. So how do you sort of balance that? Do you keep this a relatively small position, or is it a large position, or sort of how are you looking at sort of the systematic risk in that sense?
Small position. I would start with a small position till I'm convinced that yes, it's now hit mainstream. Everybody is going to go crypto is because all of these are macro trends. There are secular trends, and it's a thesis that the world is going to go that way, right? But it has got to play out, and in order for it to play out, there's multiple stakeholders involved in making it happen. So I would go only for and that means I can't predict too much. So on that play, I would always go for a small bet. I would not say what percentage. Personally, I've taken it a bit more than a small bet. So I've gone with more than 5% of my portfolio on this. But ideally, I was not so convinced. I'd have been within the 2% range. But since I've done it, I've gone for 5% because I think, and I'm going to watch this basket very, very, very closely.
Wonderful. Wonderful. Well, Satishan, that was a beautiful pitch. I really enjoyed it. I think I'll be digging into Coinbase myself.
Thank you so much.
Check it out. Guys, if you enjoyed this pitch, which I hope you will have, and I'm sure most of you, absolutely many of you will, you can follow up on Satishan's work. The link is in the show's footnotes. He's doing deep dives. He's doing updates. And I have to say, they're of extraordinary quality. So make sure to subscribe, check out Satishan's work. I think you will really enjoy it. And Satishan, again, thank you so much for joining the podcast today. I'm already looking forward to the next time. And we'll be blasting this across all the platforms. So I think it's going to be great to see the audience's reaction.
Fantastic. Thank you very much, Antonio. And I'll close it with tennis, which is close to your heart. Fantastic match on the French Open. But to make you envious, I've got day 2 tickets for the center court on Wimbledon.
Oh,
so July
no
1st, I'll be
way. So much fun. Well, that sounds amazing. Absolutely well-deserved after all the great deep dives you're doing. So it's going to be a blast. And really, like, the level of tennis lately is so high. So what a wonderful year to go to Wimbledon. So,
yeah, absolutely. Cool.
All right, Satishan. So thank you again, guys. Satishan's work is in the show's footnotes, all the links, everything. Satishan, thank you so much. Take care and see you next time.
Thank you so much, Antonio. Till next time. Bye.
Yeah.